Not every small business owner wants to be told a bunch of lies. I'm sure that most of them would rather be told the truth so that they can make an informed business decision when they're trying to borrow money for their business. We literally tell people, don't do this, don't buy this equipment. That's a really dumb thing to do.
Stop letting bad equipment financing drain your cash flow. Robert Misheloff shares how to grow safely.
Because we don't want to do bad deals. You should be able to go home at night and tell your wife and your family, hey, I helped somebody today, not I ripped somebody off or I put somebody in a bad position so I could make some commission. That's horrible. Would you pay an employee for 5 years in advance? I mean, no. Let's say an excavator is no different than an employee. The only reason to have it, employee or an excavator or anything, you're in business to make money. That's the only reason to get it.
Before we jump into this episode, I'm going to ask you a quick favor. We're coming up to 500 episodes of the Site Shed podcast now. It's apparent that only a small percentage of people that actually listen to this show follow us on the platform. Following us helps in a big way. It helps us understand the type of content that you want more of, which is why we continue to make better and better episodes. I would be super grateful if you could take a couple of seconds right now just to quickly hit follow on the app you're listening on. That would make the world of difference. Thank you so much for being part of this Site Shed journey. We look forward to sharing the next 500 episodes with you. Rob, welcome to the Site Shed podcast.
Thanks for having me, Matt.
Thanks for joining all the way from Las Vegas.
You're welcome.
We're here today to make a non-sexy topic extremely sexy. For all your listeners and viewers out there, buckle in because we are going to be talking about finance. But no, we are going to put a bit of a spin on this because it is super important. There's some key takeaways when it comes to financing equipment and things like that, which are just lines in the sands you should be doing and you shouldn't be doing. And I've got Rob on the show here today to talk about some of his experiences in the past with some things that he's seen work well, things that haven't worked well, what you guys can do in, if you are looking to potentially finance various items within your trade-based business. Rob, do you want to give us a bit of a rundown quickly as to your background?
Sure. Yeah. So I started Smart Finance USA about a dozen years ago. And the reason why I started the company, I had owned a marketing company before that. And we were marketing solar and reverse mortgages and so forth. And but we were doing direct mail and direct mail back in 2013 was just not working. I mean, it doesn't work anymore. But we hadn't quite gotten to the point where we realized you can't get business by direct mail anymore. And so our revenues were declining and someone left the company and he went to go work at an equipment financing company. And he was playing basketball with one of our employees. And he says, where are you now? I'm at this equipment financing company. Well, how are you guys getting your leads? And he says, well, they send out mailers and then people call. So I said, well, that's awesome. I'm going to send out mailers and get people to call and sell the leads. And so I start working with a bunch of equipment finance companies, guys that are my competitors now. And they were bragging to me about how dumb small business owners couldn't figure out the rates and you could just lie to them and do all these things to rip them off because a guy that maybe pours driveways is good at pouring driveways, but he's not good at finance, just like I wouldn't be good at pouring a driveway. Right. And I said, there's lots of ways to make money. And I don't want to feed my family by helping a bunch of thugs rip off small business owners. I'm just not going to do it. And so I said, well, but at the same time, like our company was hemorrhaging cash. We were on our way out the door. And so I said, well, not every small business owner wants to be told a bunch of lies. I'm sure that most of them would rather be told the truth so that they can make an informed business decision when they're trying to borrow money for their business. So I'm going to start a website and I'm going to talk on the website about all the different tricks that these guys pull. And one of the biggest things you see, by the way, is you Google something about equipment financing rates, and everyone says the same thing. They say rates from 5%, and they only tell you 5%, and they still do that today, even as interest rates have gone up all over the world. And even the best companies can't get a 5% rate. You can't get that on a mortgage. So it's crazy to think you could get it on a loan for a piece of used equipment, whether it's a dump truck or an excavator or something. So I built this website, and then the phone started ringing, and turned out a lot of people want to know what the rates are and what things look like relative to their situation, and not hear a bunch of things that aren't true and get ripped off.
So a question on these rates, because I know I've been that exact experience I had. I bought a new Ford like a couple of years ago, and they're like, oh, well, the finance rates are this. I'm like, yeah, okay, no worries. And so I went in there, and they put it all together, and they're like, this is the thing. And I'm like, that's literally double what you told me.
Right.
And they're like, oh, no, but yeah, that's like finance was from that. And I'm like, well, you either get it to that or the deal's off the table. But most people at that point, I truly believe, don't even look at the small print. They just sign it.
Well, yeah, the contracts are, number one, they're long, and they're in small print. And if you're not a lawyer, you don't really know what they say. That's one of the biggest challenges, because most small business owners don't have an attorney, and they don't have the resources. A lot of the folks we deal with is one or a two-person business, and they don't have time to have a lawyer read everything that comes across their desk, and they don't have the funding. I mean, it's not cheap, and you got to spend the time doing your business, not playing lawyer.
The thing is as well, like as business owners, you go to trusted experts thinking that you're going to be getting the right counsel. Like we recently had this same conversation with, like, we changed accountants at the beginning of the year because something didn't look right. And when we did, we unpacked all of this shit that hadn't been done right. And I'm like, well, I'm not an accountant. Like, I would never know this stuff. Like, you go to these people because they're like the trusted expert in the thing. And if they screw it up, I mean, yes, it's negligent, but you're the one who has to wear the brunt of it at the end of the day.
Sure.
So, like with these rates, like who dictates them?
So it's interesting, because what happens is kind of a behind the scenes look. We like, someone comes to us and they want to borrow X amount of money to buy whatever type of equipment. And we say, okay, so we're going to look at a few different things, and we're going to look at how long have they been in business, what does their credit look like, and not only like where's their credit score, but what's their borrowing history? Have they ever financed something for their business in the past, or have they, if not, have they at least financed an automobile or something? And based on what we see, we've got 100 different programs, and this is true across the industry, right? And we're going to match it with the program that's most likely to buy that paper at the cheapest rate that we can get for the customer. Because if we don't get a reasonable rate, someone else is going to come in and get a better rate and beat us. And so we don't make any money unless we actually do a deal for that person. So we're very motivated to find whatever's that best fit for the program. But the answer is the investor that's going to buy the paper, right? And so and just like anything else in the financial markets, the appetites constantly change, right? If the economy goes into a recession, lenders start to get really nervous, and the rates that you have to get to entice somebody to, say, finance a used truck are going to rise. when the market's really hot, bunch of new people come in. We always laugh because when markets get hot, we'll get calls from people that clearly don't know what they're doing, that want to finance things, and we talk to them and their rates are way too low, and we say, this is great, we're going to be happy to let you learn and be your first 5 defaults.
Quick pause for a second. If this episode's hitting home for you, do us a favor. Please give it a follow on this app. And if possible, please share it with someone that you think would also benefit. This podcast was brought to you by tradiewebguys, where day in, day out, we work with tradies and contractors that are looking for predictable, manageable systems to close more jobs and scale with consistency. It's a proven system that's focused on closing more jobs, not just generating more leads. We have loads of case studies and reviews on the website to back this up if you want to go check it out. If you like the sound of predictable, manageable, and consistent growth, click on the link in the description or head to tradiewebguys.com.au and start the conversation. All right, back to it. So I guess why don't we just scale it back maybe and just talk about like the advantages, why you would consider financing in scenarios maybe where you wouldn't, maybe some case study stories or something like that of, examples that you've seen where, both of where people have done this right, what that actually looks like.
Sure. So number one, most of the folks that we talk to, the reason why they're financing is because otherwise they can't grow their business, right? Is when you're talking about a small business and investing, and it could be anywhere from $20,000 to $500,000, right? Sometimes we talk to folks that are financing a drill rig for $250,000 or $500,000. And number one, the vast majority don't have that kind of cash lying around. And number two, even if you do have that cash lying around, it's in most cases, not all cases, but in most cases, it's not a very smart idea to put that kind of money into an asset when you can finance it over 5 years. And I'll give you an example of my own company, because when we very first started, we had a very small office and we didn't have a lot of cash. So we bought a bunch of crappy furniture. And then after a couple of years, we'd grown and got a much larger office so we could hire some more people. And we didn't want to interview people and continue having to come in seeing all this crappy furniture. We wanted to hire better people. And part of that, it's always about image, right? Because someone coming into a dumpy office with the cheapest furniture we could have got off Amazon says, I don't know about these guys. So we bought some fancy furniture. And incidentally, we didn't need the cash, okay? We did, but we didn't, because the hardest time, the best time to borrow money is before you actually need it, because when you need it, then you're going to get stuck. Right. And so we were buying $100,000 worth of furniture, and we borrowed the money for 2 reasons. One, I didn't want to take that money out of our bank account. And secondly, I wanted to build our business credit in case we wanted to, buy a building at some point or do something else, because as a small business, your chances of being approved and the rates that you're going to pay are highly dependent on your borrowing history. And so you go and you borrow $100,000 to buy furniture for your office. The next time you borrow money, now you're going to have a better chance of getting approved, and you're going to pay a lower financing rate.
Sure. And I guess if you're buying these things as a business expense, there's tax advantages, there's depreciation, there's all these.
Totally. And it depends on the way it's structured, right? If it's and obviously what country you're in, but if it's a loan versus a lease, and sometimes you depreciate, sometimes you write off the interest. But it all comes down to cash flow too, right? And that's really the most important thing. In our case, we just wanted we were this is a rare case. Most of the people that we work with haven't come to us because they wanted nice furniture. They're coming to us because they say, look, I've got a contract coming up, and I'm going to get in. This is a really common scenario that we hear. Hey, I've got this new contract and I need to purchase a dump truck, and the dump truck's going to cost X amount of dollars, and I'm going to get paid $100 an hour for running the dump truck. I'm going to run it for, let's say, 50 hours a week. So that's $20,000 a month in cash flow. For the fuel is going to cost me $5,000 a month. I'm going to have to pay a driver. And so what's the net? Not just what's the payment, but after the payment, and this is where it really gets important, and where, sometimes we literally tell people, don't do this, don't buy this equipment. That's a really dumb thing to do, because we don't want to do bad deals. Number one, you do a bad deal, and the person tells somebody, I got in a bad deal and I lost my business, and it's because of these guys, right? People always do that. But more importantly, again, you should be able to go home at night and tell your wife and your family, hey, I helped somebody today. Not I ripped somebody off, or I put somebody in a bad position so I could make some commission, right? Sure. That's horrible. But generally, if you look at the cash flows, what especially if you have a contract, because then how much money are you going to make?
Right.
Yeah.
So it's kind of, I guess it comes down to like opportunity loss, where you've got this I mean, like we've been through a similar thing this recently with, as a result of this whole accounting debacle that I was talking about. Like we've got like a debt with the government, which is fine. Like we can pay that, or we can invest. We can pay part of it and invest the rest of it, hope for a better return, which is inevitably what we're going to be doing. But
sure.
I guess the point is, like, if you're spending all that money, it's not always wise to spend all the money within the business on the thing. Although a lot of people have that mindset of, if you don't have the money, don't buy it, which is true to a degree. But like you say, if you've got a big contract and you need a bit of equipment to do it and it's secure, then it kind of makes sense.
Sure. I mean, would you pay an employee for 5 years in advance?
Right.
Yeah. I mean, no. And, to me, let's say an excavator is no different than an employee. It's the only reason to have it, employee or an excavator or anything, you're in business to make money. And that's the only reason to get it. And if you can't, what we find is if, the lending rates, I mean, there's finance charges, but they just aren't high enough that in a good situation, they're going to negate the cash flow.
Sure. So what are some of the key considerations then that I guess the listeners and the viewers should be considering when they're coming into purchasing a bit of equipment or whatever it might be, a vehicle, through some sort of vendor finance?
Sure. Well, first of all, sometimes we'll get people that call us that are buying equipment from a lot, a dealership, and make sure before you call an outside broker that you can't just get a better deal buying it right there. Like a lot of these dealerships, and not to put you off from calling someone like myself, but a lot of these dealerships, when you're buying, especially if it's newer construction equipment, or they'll have free or near free financing to get you to use them, and they all have to do it. Although the one thing to be careful of is make sure before you finance through that dealer, find out what the cash price is, because sometimes they say 0% financing, but they'll give you a $30,000 discount if you pay cash, because there's no such thing as free, right? That's not always true, but it's always worth asking, because a lot of times if you go and you finance it at an outside source, but you save $20,000 or $30,000 off the price of the equipment, well, that sounds like a pretty good idea.
Right. Okay. It's just weighing up the options. What about red flags?
So there's the best place to look for red flags. First of all, is always going to be the internet, right? These days, if you are, what's that?
Chat GPT.
ChatGPT or ChatGPT is actually pretty good. If you ask ChatGPT, tell me about X company in this city, and it's very important to put it by city because especially these financial companies, we all have the same names. So, and ChatGPT can be pretty good, and the other websites, like Google, and wherever you're located, there's probably a website reviews, and someone who got ripped off is going to be pretty mad and telling the world these guys, rip me off and don't use them. So that's the first thing to look for. The second thing to look for is, and you can tell if you look who's being transparent. For example, on our website, we come right and say, number one, we're not always going to be the best choice. Here's when we're a good choice. Here's when we're a bad choice. Secondly, you mentioned, them giving a teaser rate and nothing else. Well, that's a waste of everybody's time. So if they're just giving a teaser rate, they're not trying to give you information you need to inform yourself as a buyer. They're just trying to get your money in the door. And that's not the type of company to work with. For example, on our website, we've got a page where we talk about rates and we say, here's the rates if you've got everything in line, if you're the very best borrower in the world. By the way, if you're a terrible risk, here's the rates.
Yeah.
And if you're a medium risk, here's the rates. Here's what you can expect. And of course, we could be lying too. I mean, we're not, but we could be lying too. But somebody that is going to be transparent and give you a range and a reasonable range and so forth, that's a green flag. Somebody that says we're the best financing company, well, that's moronic, right? Because you can't be the best for everybody. It's like going to a place that sells Chinese food and pizza. Well, they're probably both going to stink.
Are there like hidden fees that come into this equation, and like hidden terms and all these kind of things that people can come unstuck on? Like, what are some of those?
So I'll give you the worst that I've seen, because a lot of times, so there's, I've talked about the difference between loans and leases, and I don't want to put everyone to sleep. But the big difference is in a true lease situation, at the end, like let's say it's a 36-month contract, at the end, in a lease, you don't own the equipment. You can pay a residual or give the equipment back. And so what happens sometimes in our industry is, again, people don't read their contracts, and you'll think you're signing up for a loan, meaning you own the equipment at the end. And in fact, you're signing up for a lease. And we had someone reach out to us that had borrowed money for a laptop. And it said in the contract that they had never read that they had to inform the leasing company between 90 and 180 days of when the lease was up if they chose to pay off the equipment. And they didn't know this, and this just kept on rolling, and it would roll over for another year. And by the time they realized, they said, why are we still paying money on an 8-year-old laptop? And it turned out, because it kept rolling over, they ended up paying $14,000 for that laptop, which they had originally borrowed, I think it was $2,000 for.
Wow.
So that's a pretty bad one. Another one we see pretty commonly is the advance payment scam. In most equipment financing, you'll have to pay the first and the last payment and a couple of $100 or a few $100s for documentation fees. And that's common. And so we see sometimes phony approvals go out. And what I mean by that, the company checks your credit and they send you out an approval letter and they say, sign this and send us money. And so that happens. And then they'll say, okay, well, we couldn't get the rates that we told you, and we couldn't get the dollars that were in that contract. But you'll see on page 4, that paragraph you can barely read. Well, that paragraph says that if we get you an approval, even if it's not what we said and you don't move forward, we've earned the fee. So if you don't move forward, that's fine, but we're going to keep the $2,000 you just sent us.
Yeah.
And that happens all the time.
Scam.
Yeah, total scam. The other fees are spelled out in the contract, again, which nobody reads, but usually a couple of fees that, I guess you could call them hidden fees. A lot of times, like, salespeople in this industry are very motivated to get somebody to close the deal because they have car payments and rent and food to buy and all this stuff. And at every company, you have people taking shortcuts and not explaining, here's what the contract is. And so you'll have things like, here's the documentation fee, and interim fees, right? If you go in and you lease an apartment and you move in on the 20th, but rent is due on the 1st, you're going to owe 10 days. And it's no different in equipment financing. And so, for instance, if your payment is $1,000 a month and you get it halfway through the month instead of at the beginning of the month, you're going to owe a half of a month payment, that sort of thing. That's not really a hidden fee, but it's something to know about.
How would somebody know if they don't have good credit? Like, how do you find out if your credit is decent?
So I think most people know. But there's the online sites where you can pull your own credit.
So when you go into, say, a finance company and they come back to you and they say, hey, based on your credit, this is the percentage rate that we can give you.
Sure.
Like, is that publicly accessible knowledge? Like, can anybody go in there and figure out learn what their credit rating is?
Oh, sure.
Because I don't know if it's different in the US, but I know in Australia, like, we had an issue with, you hear it all the time over here, where you've got like telephone providers or like telecom companies and that kind of thing that, people default on a phone bill or something, or they move home and the bills get sent to the wrong address, and then all of a sudden they get this this huge red cross on their credit rating and they can't get a loan for their mortgage and all of this kind of thing. But no one knows.
Yeah, here in the States, we've got a number of, like, myfico.com or Credit Karma or TransUnion. I think they're all, they're like $10 a month to sign up to figure that out. But in general, like a phone bill is not going to keep anyone from financing equipment, but having your car repossessed will. And I believe me, I think if your car or your dump truck, say, or your semi truck gets repossessed.
Well, this is actually funny you say that, because a good friend of mine, I was away with him the other weekend, and that actually happened to him. He had a vehicle, and this guy just rocked up in a tow truck, and he goes, "What are you doing?" He goes, "I'm repossessing your car." And he goes, "Why?" He goes, "Oh, you haven't made your payments." He goes, "I have made my payments." Anyway, the guy took the car, and now he's in this battle with the company because he's not paying the holding fees and all this bullshit, but he wasn't even notified.
Whoa.
It was... Anyway, that's his side of the story. Maybe they've got their own side of the story. I'm not sure. But, you do hear these stories from time to time and you think, holy shit, like, what have I signed up for?
Yeah. It's very rare. Well, sometimes there's mistakes on credit reports, right? And somebody literally doesn't know. And they say, no, my credit's just fine. You find out, your aunt stole your credit card or something, and then the bill didn't get paid. We've done thousands of transactions. So we've seen things like that. But in general, most people know what their credit is, and it's not hard to kind of at least get an idea of what your credit score looks like.
I imagine you just go into get this vehicle or this bit of equipment or whatever it is, and you've got this idea in your head of what it's going to say because you've seen finance on the thing, and you go in there and it's like not the case. It's kind of disheartening.
Well, yeah, and well, especially for I'll tell you one thing that really trips up a lot of folks, and business financing is much riskier than consumer financing. So if I go and I buy myself a car, say a Honda or something, unless I've got really bad credit, my rates are going to be pretty good on that car. And a lot of folks come to us expecting their rates to finance a used, piece of construction equipment or a used trade vehicle, and they expect the rates to be pretty similar to if they were to finance a car. And in most cases, that's not the case because if you're buying a car to get to work, that's going to be the last thing you don't pay.
Right.
Well, I mean, the last thing's probably your house. Can't get kicked out of your house, but you're gonna put off a lot of things before you don't pay for your car because you can't even get to the grocery store without a car. In business financing, the number of people that aren't able to make their payments is much, much higher. Number one, because there's a lot of things that's outside of a business owner's control. You could lose a contract. You could have your equipment break down and it'd be $10,000 to fix it. And it just happens to happen when you don't have the money to get it fixed, or you just go out of business. The economy happens, and all of a sudden your industry is wiped out for a couple of years. And investors who are buying that note have to factor those things in. So, for example, a startup business, even if you've got good personal credit, but you have no operating history, that's a risky transaction. And your payments on that equipment are going to reflect the fact that somebody has to be compensated for the risk that you might not pay them back. And that's not somebody being a crook. That's someone saying, based on, history of financing thousands of these things, we know that 10% of the time, depending on the credit portfolio, I'm just throwing out a random number, 10% of the time, we're going to have to come get that equipment, and then we're going to have to auction it, and we're going to be lucky if we get 50% back when we do that. So, I mean, you're not going to get a 5% rate if you just started you're not going to get a 5% rate right now anyway. But if you just started your business, you are not qualified for the best rates, no matter what you think. And so that's a conversation that lenders all over the world have to have with new business owners.
How often do you see people coming in that don't have a clear forecast budget? Like
all the time. Yeah.
I can imagine. And is it often the case that you think where people will sort of overextend on the piece of equipment due to the finance they can get because it doesn't feel like real money?
That we don't see too much, partially because we train our salespeople here to go through that with people. Again, it's very important to us to try to avoid helping somebody make a bad deal. But it certainly happens. And I've had folks call in and ask them, what are you expecting your payment to be? And they tell you the payment, and you go, well, that would be like a negative 5% interest rate. So that's not going to be your payment.
Right.
Yeah.
So it's kind of the responsibility of the advisor to be leading people in the right frame there. I mean, but people come in with unrealistic expectations. You're very much kind of in the education space at that point, right?
Yeah. So number one, like just being trying to be a good person. You don't want to put somebody else in a deal where they're unlikely to be able to make their payments. But secondly, if you don't help people be reasonable in their expectations, like your default rate will be higher, and the lenders that you work with in this business as a broker, if you have a lower default rate, you can get better deals for your customers and you'll be more competitive. So it's really pretty important to not have a bunch of crap paper that you're sending out, because it will, you can get cut off from lenders, you can lose access to the best programs, all sorts of things. But more importantly, your reputation is pretty important. And if you make it a point to help people, like, you'll have a good reputation.
Sure. Cool. I mean, so what else do we need to cover off on here in this chat?
I think that's most of it. The most important things are work with honest people, know your numbers, and try to avoid getting ripped off.
Yeah. I mean, that's kind of like work with honest people. It's a slippery one, isn't it? Because you like to think that you are, but the reality is often otherwise.
Yeah. Just know, and there's no fail safe. Like, you can get tricked, obviously, but there are there's things to look for that'll show you if you're working with a decent person.
Sure.
Yeah.
All right. Well, look, I'll put links to all of your website and stuff like that in the show notes for you, North American-based listeners and viewers. If you want to get hold of Rob and talk finance, then I'll put some links to Smarter Finance USA over in the show notes. But the website is smarterfinanceusa.com for anyone that's interested. Rob, thanks for the call. I know it's one of these conversations which, like we kind of said earlier in the piece, is not exactly sexy, but it's important that people understand these dynamics of what this looks like, because pretty much every business at some point leverages finance. And
totally.
So, it's important to get their head around these conversations, and importantly, sort of be in touch with people that they can trust and aren't going to try and fleece them at every corner. So,
Totally.
Thanks for flying that flag.
Yeah, thanks for having me, Matt. I loved it.
Awesome. Well, listeners and viewers, that is a wrap. If you've got any questions, let us know. Otherwise, we'll wrap this one up. Thank you.
Thank you.
Hey guys and girls, how would you like all of the value adds left behind from our podcast guest all put together in the one spot? We've pulled every tool together, every template, every resource shared on the show, and we've packed them all into the Tradie Academy. It's free to join, and it's built by the team behind the site shed and tradiewebguys. Inside, you'll get marketing tips, business tools, and first access to future resources, all in one simple dashboard. Just head across to tradie.wiki/pod. That's tradie.wiki/pod. The link's in the episode description. And once again, you just log in once and then you're all set. And if you want to get notified of upcoming episodes, hit subscribe or follow.